How is the Massachusetts estate tax calculated? Have you ever wondered how the Massachusetts estate tax is calculated? Understanding this process can be essential for effective estate planning. Let's break it down step by step. First, the calculation begins with the gross estate. This includes everything the deceased owned at the time of death, whether it is located in Massachusetts or elsewhere. It covers assets like real estate, bank accounts, investments, and even life insurance proceeds. Next, we need to determine the taxable estate. This is done using a specific formula. You take the gross estate and add any lifetime gifts. Then, subtract the standard exemption, which is $60,000, along with any liabilities and expenses. The result is what we call the adjusted taxable estate. As of January 1st, 2023, the estate tax exemption in Massachusetts increased to $2 million. This means if your estate is valued at $2 million or less, you will not owe any estate tax. However, if your estate exceeds this threshold, you will only pay tax on the amount above $2 million. Now, let's talk about tax rates. Massachusetts uses a graduated tax rate schedule that ranges from 0.8% to 16%. The exact rate depends on the size of the taxable estate. Most estates that fall above the exemption but below $10 million typically see an effective tax rate between 5% and 10%. The calculation also references the federal estate tax credit for state death taxes, as it was defined under the Internal Revenue Code on December 31st, 2000. This means Massachusetts calculates what the federal credit would have been for the estate and uses that to determine the state tax owed. If the deceased owned property outside of Massachusetts, recent changes will affect how the estate tax is calculated. Starting in 2024, the federal taxable estate will first be reduced by the value of any out-of-state property before applying the tax rates. This adjustment helps prevent higher tax brackets from applying to the entire estate value due to out-of-state assets. Additionally, if there are estate or inheritance taxes owed to other states, Massachusetts allows a credit to avoid double taxation. This credit is the lesser of the total taxes paid to other states or a proportional amount of the state death tax credit based on the value of the out-of-state property. For those planning their estates, it is important to understand the $2 million exemption. This knowledge can help determine whether your estate will be subject to tax. Working with an estate planning attorney or tax professional can help navigate these rules effectively. In summary, the Massachusetts estate tax is calculated by determining the adjusted taxable estate after exemptions and liabilities, then applying a graduated tax rate schedule based on a federal credit formula from 2000, with specific adjustments for out-of-state property and credits for taxes paid elsewhere. Understanding these details can help you make informed decisions about your estate planning.